And I wanted to share a few words before we started today's show and say that our hearts go out to anyone that was impacted by yesterday's earthquake that hit Syria and Turkey. We know that there are big Bitcoin communities in those countries, and we hope that you and your loved ones are safe. Now, onwards to our analysis. Bitcoin friends, welcome back to your economic calendar, the information you need to start the week off right in Bitcoin. As always, I'm Mauricio Di Bartolomeo here at Ledn, and today is Tuesday, February the 7th. We have a great episode for you this week. We'll get 9 Fed speeches in the week ahead, including Mr. Jerome Powell himself. Fed officials are out in full force after last week's announcement, and investors will be paying close attention to any commentary they may have around potential future rate hikes. We're also going to look at U.S. corporate earnings, where we have some earnings relevant for Bitcoin this week in the likes of Robinhood, PayPal, Uber, and more. And as we do usually here in the Beck, we're going to focus on 3 big trends that are impacting markets. Number 1 is the agreement in principle that was reached by DCG, Genesis, and its creditors that was announced last night. We're also going to cover Binance and how it is currently suspending, or this week it will suspend deposits and withdrawals on US dollars. And we're also going to look at the last time that markets rallied as interest rates were rising. And we're going to look at how that played out, and could we get some clues as to where we might be headed, seeing that we are now seeing equities rising as the Fed continues to rise interest rates, but it's getting closer to its terminal rate. So we're going to look back in history and see if we can get some clues as to how this has played out in the past. So grab your coffees, it's going to be a great one. And as always, let's start by looking at Bitcoin's performance over the last week and checking in on some technicals. So as we can see, Bitcoin continues to trade within a narrow channel between 22.3 and 24.3 roughly. Last week, the Federal Reserve, the European Central Bank, and the Bank of England all raised interest rates, and Bitcoin held its ground quite well in light of the announcements. All of those announcements came in as expected by investors. Now, as we had highlighted a few weeks ago, the rally from 17K to 23K that went on in about 10 days, from January 10th to the 20th, this is the 10th and this is the 20th, just so you know, had placed Bitcoin in an overbought condition as per the relative strength indicator. Let's just pop up that indicator here so that we can view what we're talking about. So as you can see here, these purple and yellow line, which were well above the 70s level, which basically signals an overbought condition, have slowly come back down into what is deemed to be their normal ranges. So Bitcoin has progressed from an overbought condition from a technical standpoint to now a pretty neutral position, which creates a healthier technical setup for Bitcoin's next move. Now, another point that we wanted to highlight is that short interest for Bitcoin remains at near historic lows. And for that, we're going to pop up the short interest chart here on Bitfinex. And you can see here that the levels that they are currently at is basically around the lowest levels that they have ever been. And they are not growing, which is the interesting thing. Often in the past, when we had seen Bitcoin price rally, we saw a big increase in short interest. And this was investors in some ways basically expressing that they felt that Bitcoin had more room to go down. The fact that we're not seeing new short positions growing at the current levels suggests that investors might be seeing limited downside left from the current levels. Now, another implication of the lack of short interest is that this will reduce the chances for another sudden price rally for Bitcoin, because typically when we have large and sudden rallies, they have been accompanied by the liquidation of open short positions. Now, these open short positions are not here, they're not building up yet, and therefore you can think of that as the fuel for a big sort of vertical move higher. So because the short interest is not growing, the potential for that big move higher becomes lower. Now, in terms of key technical resistance and support levels for Bitcoin, we continue to track the 200-day moving average, which is currently sitting at 19,721 as a support to the downside. And we're looking at the 200-week moving average as potential resistance to the upside. And that level is currently at 24,818. And now let's dive into our three big trends for the week. As we mentioned at the top, the first one we're going to look at is the recent agreement in principle that was reached between DCG, Genesis, and its creditors. The second one we're going to look at is Binance and its announcement from yesterday that it'll be pausing deposits and withdrawals on US dollars as of Wednesday, so as of tomorrow, later this week. And the third one we're going to be looking at is what have markets done in the last time that interest rates rose and equities had a big rally. There was an instance of this back in the dot-com boom that we can look and potentially get some clues as to where we could be heading in the current environment. So onwards to our three trends, and let's start with the first one, which is this agreement in principle that has been reached between Genesis, DCG, and its creditors, and that is, as per the headline on your screen, the news broke yesterday. CoinDesk broke the news. Basically it came out yesterday afternoon, and it says, as you can read from the screen, that the bankrupt lender Genesis and its parent company DCG had reached an initial agreement with its main creditors. Now, the news was later confirmed by Cameron Winklevoss, who also commented that Gemini would contribute an additional $100 million towards Gemini Earn users. Now, while the announcements used the words such as substantial recovery for Genesis creditors, Cameron Winklevoss went even further and said that the $100 million that Gemini had pledged were a sign of Gemini's commitment to helping Earn users get a full recovery of their assets. Now, in short, it appears that Genesis and its creditors are much closer to striking a restructuring deal to prevent a full bankruptcy process. The news is structurally positive for the industry, as it appears that billions worth of assets that were thought to be lost will be coming back to the market very soon. So this is the headline that we had been talking about over the last few issues. There were a lot of rumblings that an update or a decision could be coming around this bankruptcy case, and we're now seeing a lot more progress. So this should definitely be taken as a positive event for markets. The second point we're going to talk about today is the news that broke yesterday, where Binance announced that it will suspend US dollar deposits and withdrawals this week. And yes, you heard that right. The world's biggest crypto exchange will stop supporting deposits and withdrawals on the world's biggest currency. So this was reported yesterday, and the news says that Binance will suspend US dollar bank transfers as of tomorrow, Wednesday the 8th. Now, Binance CEO, known as ZZ, confirmed the news on Twitter, saying that it impacts only a very small percentage of its clients. And from CZ's quote on Twitter, it also appears that the move is due to Binance's US dollar banking partner. The quote that alludes to that is CZ's quote where he says, and I quote, "While some banks are withdrawing support for crypto, other banks are moving in. Some setbacks are expected from last year's incidents. Long term, keep building," end quotes. So Binance is just the latest casualty of banking partner restrictions. Other companies in the industry have also reported changes to their buying and selling functions as a result of recent changes. And an example of that is the news from Wire. As you can see on your screen, Wire was a crypto payment startup that ran into issues with processing payments. So again, this Binance is another case of these such announcements. Now, it should come as no surprise that banks with exposure to the crypto space are coming under pressure from their regulators. This is something I'm going to touch on right now. Among the examples of some of the actions that have been taken by regulators is the recent statement that we saw from the FDIC, the Federal Deposit Insurance Corporation, to banking organizations about crypto assets. And this was basically an open letter that went out to banks from the FDIC highlighting the risks of crypto assets. So again, this is something that we've been covering, and this might be something that we see more of in the weeks and months to come. And the third trend that we want to talk about is what has happened historically when markets rally as the Fed is raising interest rates. And for that, we wanted to show a quick chart comparing the NASDAQ in the blue line and the Federal Reserve's funds rate, or the interest rate, overnight interest rate, which is in the orange line. And interestingly, take a look at the price action that you see highlighted by the red circle. So let's get into that in a second. So last week, all three central banks, the Bank of England, the Federal Reserve, and the European Central Bank, raised interest rates. The Fed raised 25 basis points to 4.75% is where their overnight is. The European Central Bank raised 50 basis points to 3% overnight. That's where the European Central Bank is. And the Bank of England raised 50 basis points to 4%. So again, Fed at 4.75, European Central Bank at 3, and the Bank of England at 4. And they're all raising rates. As we look ahead for the remainder of 2023, U.S. investors widely believe that the Fed will tap out at 5.25% interest. So that means that it will tap out after two more 25 basis points increases. And these are scheduled for March and May. And this is according to the CME's FedWatch tool. Now, markets have gotten giddy on the thought that rates will not rise further. However, rates could also remain high for a lot longer than many expect. And that is also a problem. As you can see from the chart on your screen, back in the early 2000s, markets also rallied considerably as the Fed was reaching its terminal rates. However, the Fed kept rates very high for almost a year, and markets dropped precipitously right after or during this process. Now, nobody wants to rain on the rally parade, but keep in mind that interest rate effects are lagging and they take time. It's like starting a locomotive engine. It takes a long time to get going, but once it does, it becomes very hard to stop. So again, just saying or recapping that in the same way that the Fed takes too long to lower rates when things are bad, it will take too long to raise rates when things are good. It is going to take the Fed potentially too long to drop rates as things starting to go bad. So just something to consider. And as always, we wrap up with a summary of what you can expect for the week ahead. Now, the week ahead is loaded with Fed speeches and US corporate earnings that could be relevant for Bitcoin. On the Fed front, Chairman Jerome Powell headlines the list of 9 Fed member speeches throughout the week. Interestingly, Powell did not talk down the markets during the last week's press release as he has in previous press releases. And markets have rallied significantly since the December meeting, which was the last time that he basically tried to talk the markets down. So far, investors have taken that as confirmation that the Fed is done fighting the markets higher. Now, Powell and company can quickly shatter those dreams with carefully selected words and future actions. Now, that is going to be what investors are going to be paying attention to as this week progresses and the Fed speeches are released. Now, on the corporate earnings front, there are several reports that could be relevant for Bitcoin. These are the likes of Robinhood, Uber, PayPal. There's also a few companies that could have some relevant comments like Activision, Blizzard, Hertz, Disney, Pepsi, and others. Full details are in our list at the bottom. And as always, you can see the full details of when the Fed speeches are coming out and these earnings, which days they're being published by the chart you have on your screen. This will also be in your inbox. With that, we've reached the end of today's show. If you enjoyed the show, if you learned something, I welcome you to thumbs up it, like it, subscribe to our channel, share with your friends and family. And if you don't yet have a Ledn account, I welcome you to check us out at ledn.io, and you can check out the industry's best Bitcoin-backed loans, as well as our savings accounts, our Bitcoin mortgage, and a bunch more products that we have for all you Bitcoiners out there. So have a great one. Take care. Los quiero mucho, and see you next week.